Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and this is the show where we take you through how the markets have wrapped up for today's trading session. And start of the week has been good for the Indian markets. In fact, we are taking a cue from the global markets, a positive handover coming in from the global market, and also the fact that the Brent crude has eased off. It's below $60 a barrel. That is aiding the Indian markets. Apart from the FII buying coming back into the Indian market, and Nifty managed to surpass 24,450 levels. In fact, there was a point in the day where we managed to cross the 24,500 level. We eased off from there, but nonetheless, we managed to close up 24,461 as well. Closed in on the Nifty. Nifty Bank, however, was reeling under pressure. In fact, the entire financial pack was reeling under selling pressure. Nifty Bank traded down 195 points. In fact, we ended the day at 24,919 is when Nifty Bank ended the day. In fact, we had Kotak Mahindra Bank, SBI that posted its Q4 results. And on the back of that, they were dragging the entire Nifty Bank down. So that was trading lower. So Nifty Bank wasn't doing very well today. But besides that, we had a couple of other names that were in focus on the back of their earnings. We had Avenue Supermarts that slipped on the back of a poor show because of the increasing competitive intensity from the quick commerce players. We also had Marico that reported its Q4 numbers. Good set of numbers coming in for Marico, and on the back of that, Marico was doing pretty well. But besides that, we also had M&M that reported its Q4 results during the market hour, and a strong set came in for M&M as well. So M&M was also trading up right post its results. So we saw a beat coming in on all the expectations as far as M&M is concerned. But besides that, we also had a couple of other names that were in focus today on the back of crude prices easing below the $60 barrel mark, like the tire and the paint companies, Asian Paints, Berger Paints, MRF. These were trading with the gains of 2%. We also had the oil marketing companies like BPCL, HPCL, all of them trading upwards of anywhere between 4 to 6% on the back of easing crude prices. We also had the entire Adani pack that was in focus today. Adani Ports, Adani Green, Adani Enterprises, because Adani representatives had a word with the Trump administration to drop the criminal charges on the back of the bribery case. On the back of that, the entire Adani pack was also moving in trade today. And well, besides that, we also had JSW Steel that had asked, that made a plea to Supreme Court to see, to actually review the Bhushan Power case that's going on. So, in the back of that, JSW Steel was also in focus today, and also the government has asked states to ensure adequate power supply given the power shortages across the country because of the soaring temperatures. So that's the top news for the day, and that's how the market shaped up in today's trading session. Broader markets were on fire. In fact, the mid-cap was doing pretty well in today's trading session, outperformed the market, the benchmark indices. But let's get a guest on board to weigh in on how the market will shape up now. We are joined by Ruchit Jain, Vice President, Equity Technical Research, Wealth Management, Motilal Oswal Financial Services joining us. Hi Ruchit, thank you so much for joining us today. Good start to the week, I would say. A good strong global cues coming in there. Nifty Bank, of course, it continues to consolidate. What are the levels to watch out for Nifty and Nifty Bank?
Yeah, hi, very good afternoon. Well, in last few trading sessions, we have seen that on the index front, there is more of a consolidation in both Nifty as well as Bank Nifty. Well, Nifty, 24,500 to 24,600 immediate resistance zone, as it is the 61.8% retracement level of the entire downfall that we witnessed from all-time high to the low of 21,750. So we believe that markets would see either some time-wise correction, which could be in the form of consolidation at current levels on the index, or probably some profit booking could be seen going ahead. But definitely remains a buy and dip market, and any such correction or consolidation comes, then we would look for buying opportunities on declines. So I think this is more of a stock specific market now. If one is looking from a very short term perspective, you can see a lot of sectors, a lot of themes playing out in the market. So even if you look at today, Nifty was up by about 100 points, Bank Nifty was by 200 points, but there was a good stock specific momentum in the broader markets. So we are of the opinion that markets would see some sort of consolidation in the near term, with 24,500 to 600 being the immediate resistance, and on the low side 24,000 being the immediate support. So one should keep a buy and dip strategy as far as index is concerned, and focus more on a stock specific or sector specific approach for time being.
All right, a sector-specific approach and a buy and dip call coming in. But tell us, Ruchit, what are your picks? Any buy calls coming in this market?
Yes, in fact, I have a couple of recommendations both on the buy side. No, one is from the defense theme HAL. We believe that this entire defense space could do well in the short term. We can see that the recent price up moves in the month of April were supported by very good volumes in many of the defense names. HAL has given a breakout from its resistance. A high top, high bottom structure is there. Minor corrections which are coming in between. There is no volume based selling happening in the stock. Whereas when the stock is going up, volumes are increasing. So the overall structure remains quite positive over here. Even at current levels, one can look for buying HL with stop loss below 44.70 for potential near-term targets around 4800. And Dixon Technologies is another name which looks quite interesting on the charts. Recent up move, then a consolidation has led to a bullish flag pattern formation, which is a bullish continuation pattern in technical analysis. And hence, we expect the uptrend to continue in the near term. So Dixon Technologies can be bought with stop loss below 16,250 from a trading perspective for potential targets around 17,300 to 17,400.
All right, so two buy calls coming in there, HAL and Dixon Tech. But Richard, thank you so much for joining us with your picks and your take on the market. But moving on to the word coming in from the wise, a clear shift in investor interest as uncertainty plagues sentiments in the U.S. despite the turn of events under the tariff rhetoric. BlackRock's Ben Powell remains overweight on U.S. equities, even as he says that he reiterates there are multiple tailwinds and mega forces working in India's favor. Let's go across and listen into what he has to say.
We continue to like the US. It's still the epicenter of creating the future. They've still got the universities and the ability to monetize the intellectual property they create. So the US for now really central to the AI super boom, which we think continues. And the data, as I just mentioned, is supportive of that. That's one. Secondly, I'll talk to one emerging market we continue to like, which is India. So India, in a way, it's quite interesting, right? India was kind of ahead of the game in being worried. So had it sell off a few months ago. Now I think we've got a much more interesting position in India with tailwinds, actually, potentially from the geopolitical fracturing, where India is in, I think, a really strong position to carefully and respectfully negotiate great deals with different counterparties, not just the US, but more generally. That's one. Two, OPEC announcement over the weekend. Oil prices falling looks likely to continue. Obviously, that will benefit India in aggregate, different parts of the economy differently, but in the round, that's a good news. And that should give the RBI, if they feel they need it, more room for maneuver. So I look at India as an example of an emerging market which is actually benefiting from a number of these mega forces.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back. More updates on the other side. Welcome back. You tune into Your Trades, and to put the spotlight on some of the interesting market data from the research desk at ET Now, we take stock of how the market has fared over the last decade in the month of May. Here's we're joined by Sharad now to pull all those moves into perspectives. Sharad, take it away.
Well, the May seasonality, if you look at it, Nifty, the 10-year average numbers, that has come in almost 1.5% returns. For the mid-cap also, it has been positive, but not so much as what Nifty would be coming into positive times. 6 out of 10 times Nifty has turned positive, but these numbers are lower when it comes to the mid-cap and the small-cap indices. Also, the number 2014, the numbers which are there, which you're seeing on the screen, these are very high levels. That is because of the first government of NDA coming into power. That was that month, and that's why the numbers are looking very high. 10-year average, if you look at it overall for the segmental space, metal, pharma and energy, you look at it, it's in the negative. The best performing has been auto, and today also the auto index has been one of the top sectoral gainer index as well. So May augurs really well when it comes to the auto space, where the Nifty Auto Index jumped 4%. Realty, bank, FMCG, over here the range goes between 1.3 to 3 odd percent. PSU banks, nothing much, flat, but IT space also towards the positive side of almost 1 odd percent. Now let's look at the indices which are closed in green at least 7 times or more. There are almost 5 segments to watch out for. There's Nifty Bank, Nifty Auto, Nifty FMCG, Nifty Financial Services, and also Nifty MNC making it to the list. And this data we have taken over the last 10 years as per Bloomberg. However, there's a good news. No indices has closed in red at least 7 times. So that is something positive for the May seasonality. But the FNO stocks 10-year average, JM Financial came out with its report with the probability of strong returns coming in the month of May. M&M Average is 8.4%, and we are seeing that happening. It's actually helping the average. Today itself, Kotak Bank is up 4%, Concor up 5.8%, KI Industries and HAL also making it to the list, where a significant good amount of returns have come in the month of May. Now let's look at the opposite side of the coin, where the FNO stocks, if you look at it, the positive seasonality has been on the negative side. Bank of India, that's down 6.2%, recently came out with its numbers also. SAIL PNB also on the side, with almost, you could say, ranging between 5.6 to 5.7% degrowth as an average over the last 10 years. And also making it to the list is from banking and financial space, IIFL and Bank of Baroda, that's down almost 3.1 and 5.4% respectively. So largely BFSI, it is not that great when it comes to May seasonality on the 10-year average basis, but autos seems to be the flavor for the month of May, and that's what the history is stating, and today that history is repeating itself.
All right, so that is what the May seasonality looks like, and it's a wait and watch to see how this May pans out to be. It was a good start though to the week, but moving on to one of the high flyers in trade, M&M, that reported its Q4 numbers, and it was a beat all across the counts in the fourth quarter. My colleague Varun is standing by with the fine print of the earnings. Over to you, Varun.
Well, so M&M has posted good results, and it's a beat on majority of the parameters. If you look at revenues, they have gone up by around 24.4%, and the revenues now stand at around 31,353 crores. We were expecting the revenues to come at around 30,000 crores. Also, the EBITDA has shown a good growth of around 42%, and the margins, we were expecting the margins to grow from 13.1% to 14%, but the margins have shown a significant growth, and they now stand at around 14.9%. Also, the profit has gone up by around 21.85%, and they now stand at around 2,437 crores. Now, the company says that they have gained market share in FY25. In SUVs, the market share is up by around 210 basis points. In LCVs, the market share is up by around 290 basis points. In tractors also, it has been the highest full year market share for the company at around 43.3%, and the overall growth has been around 170 basis points. And also in electric three-wheelers, the overall market share has gone up 4.5 times in almost 3 years. For the auto segment, the company's overall volumes have gone up by around 18%, and the market share has gone up by around 310 basis points. For the farm division, the overall volumes have gone up by around 23%, and the overall market share has increased by around 170 basis points. The company says it is a solid performance across verticals, and because of the better execution and also because of capital allocation discipline, the company has been able to show better results in majority of the divisions. And also the company says in auto and farm, the company maintains its market leadership with good growth. In FY25, the company has generated good cash of around 10,000 crores. So it's been a good year for M&M, the FY25 year, and also a good quarter for M&M, wherein there has been beat in majority of the parameters.
Right, and also Dr. Anish Shah, who's the Group Chief Executive Officer and Managing Director of Mahindra Group, discussed the growth outlook going forward. He also said that the price cuts are not on the cards to increase the market share. Let's go across and listen into what he had to say.
Our SUV revenue market share is 2.5%. Our LCV market share is 51.9%. Our tractor market share is 43.4%. Our electric three-wheeler market share is around 44%. So at 22.5, I think we still have some room to go. We've gained market share even when our share has been high. In tractors over the last few years, we've gone from high 30s to mid 40s. In LCVs, we've gone from, again, high 30s and low 40s to low 50s now. So for us, it's going to be really around execution and delivery of value. We don't believe in cutting prices to gain market share.
All right, that was the management of M&M that joined exclusively from ETNA studio. But moving on to the next counter that was in focus today, that was JSW Steel, that was trading under pressure today. This after the Apex Court declared JSW Steel's buyout plan for Bhushan and steel illegal. Now, the court has in fact slammed the company for being dishonest and fraudulent. Let's go across to my colleague Ankur to understand which banks are set to take a big hit basis the exposure.
Yes, sources say that JSW Steel is mulling legal options against a Supreme Court order of liquidation of Bhushan Power and Steel. What we understand is that they may move a petition this week in Supreme Court, and it may be a review petition. There is also contemplation by MCA as well as IBBI regarding the final verdict of Supreme Court in this case, because this will have implications to the whole ecosystem, not only JSW Steel and bankers, and the Supreme Court had clearly mentioned that resolution plan violated IBC provisions as per Supreme Court. So whether or not there are changes which needs to be done in the whole framework, all these things are being understood by government, and as far as bankers are concerned, they are in wait and watch mode, because as per order they have to refund rupees 19,350 crore and liquidation of Bhushan Power and Steel will be completed later. But all in all, they will have to make provisions in the current financial year and also need to figure out what happens to the recovery, because there will be deficit of over rupees 19,000 crore. The largest hit will be taken by State Bank of India, because they have a planned recovery of around 3,900 crore from Bhushan Power and Steel, followed by Punjab National Bank, which has a recovery of rupees 2,700 crore among other bankers.
All right, moving on to the other counters that were in focus today. A couple of other names, a couple of other buzzers that were in focus in today's trading session. To get us those names, let's go across to my colleague Rabinder, who's standing by with all the details of those stocks in news. Over to you, Rabinder.
Well, as Biocon is in focus, where Biocon Biologics secures strong market access coverage for yes intake in the United States, covering 100+ million lives, and yes intakes used for skin treatment. Moving to next, Capital Global were also in focus, where company has announced its Q4 number, and the company reported a NII at rupees 324 crore, which was approx 60% year-on-year basis. And if we talk about PAT, then company reported net profit at 158 crore as compared to 56 crore year-on-year basis. Moving to next, Marico were also in focus, where company reported this Q4 number, and the company reported 7% volume growth, which is at 14-quarter high, and PAT rises at rupees 343 crore, which was up by 8% year-on-year basis. If we talk about EBITDA, then EBITDA also rose 4% year-on-year basis at rupees 458 crore. Moving to next, Devyani International were also in focus, where Devyani International inaugurates its first New York Fries store in India. And lastly, on back of brokerage note, Capital Goods stock were also in focus, where MK has come out with a note on Capital Goods stock, and they have initiated a coverage on ABB India with ad rating and target price of rupees 6,100, which was up 12%, which is up to 12% upside. And they have also initiated a coverage on CG Power Industrial and Solution with buy rating and target price of rupees 765.
All right, moving on then to another counter that was in focus today, and that was the City Union Bank that reported its Q4 numbers. Now, they say that they will continue to be conservative lending philosophy. That's the word that came in from N. Kamakodi, who's the Managing Director and CEO of City Union Bank. Let's go across and listen to what else he had to say about the NIMs going forward.
We expect if this is like say slow and steady pace, as we have seen in the past, like having about 50 to 75 basis point happening over the period of next 3 to 4 quarters in a slow and steady fashion, we should be in a position to maintain our net interest margin. And as we have said in our con call, 90% of last 50-60 quarters, we were able to maintain in a range of 3.4 to 3.7, and whatever we have showed now comes in that gap. And we feel, I mean, the factor which determines that will be like how quicker your rate of interest reduction cycle happens. At the current expected level, we hope we should be in a position to, by and large, maintain in this smaller range. We will continue with our conservative lending philosophy with more focus on the secured both MSME, commercial trading, gold loan, and agriculture and all.
All right, with that, it's curtains down on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.